Now, the oil price has bounced back after reaching a 7-week low this week. This as hopes of an Israel-Hamas ceasefire strengthen. Senior commodities trader from RMB, Raymond Philips, joins me now to delve deeper into this and other factors driving the oil price. Thank you so much for your time, Ray. Now, just as we take stock of what the oil price looks like, where are we in terms of that from when we started? Are we trading at near highs? What is the positioning of the price looking like right now?
Cool stuff. So, I mean, looking at where that active Brent future is trading at the moment, I would describe it as mid-range.
Okay.
If you're looking at it in terms of the calendar year.
Yeah.
Look, our highs for this year were just, a touch above $90 per barrel, but it has come off a little bit there. And like you mentioned, there's a few factors that play at the moment that sort of took us back here into sort of a level below $85 per barrel.
Yeah, it's really quite interesting that you say that the highs that we have seen so far have just been over $90 a barrel. And I know that, I mean, when this Israel-Hamas war started, there were talks of over $100 a barrel. What does the actual war premium look like right now on the oil price? Or does it just depend on the day?
I think it's a bit of both, actually.
Yeah.
Look, like you said, a lot of guys are wringing their hands thinking that we might see triple digits on Brent. And you have a very strange situation where many a morning on the weekend, for example, we'd wake up and, be worried about, two nuclear-armed jurisdictions firing missiles at each other. And yet we come out of this with sort of a bit of a relief sort of dip lower. I think, like you mentioned, there was and still is, I believe, a geopolitical risk premium on Brent. Most of the market talk was that was roughly $5 per barrel. I still think there's something in there with regards to the risk. Obviously, that whole region is still, pretty tense at the moment. I would say is maybe about a $2 to $3 per barrel premium still on Brent at the moment.
Yeah. And are there actually any other geopolitical tensions that the oil market is looking at besides the concentrated Israel-Hamas war? I mean, just now we're also talking about maybe exports by Iran to China.
Yes, I think it's not a foreign thing for us to deal with or look at sanctions on Iranian oil.
Yeah.
I think the thing is, though, Iranian oil is always, if you look at some of the numbers out there, found a way to still make it up into the oil supply network. So that is obviously something very interesting because I think Iran has irked the US and other Israeli allies recently. Other than that, I'd say, the Red Sea region is still pretty tense at the moment as well. A lot of guys still monitoring if the Houthi rebels are targeting vessels around there. I think it still remains pretty tentative there.
Right. And talking about things on the supply side, I mean, we also had overnight, we saw in the US inventories ticking up there. So what are things looking like?
Yes, I mean, I think the survey or the expectation of the US inventories yesterday was that there'd be a draw of roughly, let's say, 2 million barrels.
Yeah.
But it actually emerged that there was a build of around 7 million barrels. So obviously that's quite a big difference. Look, has been a bit of volatility in those sort of numbers or those data prints from the US inventories. I think, though, with that level of disparity coming through, that was definitely a bearish factor that hurt oil prices yesterday.
Yeah. And also, does that maybe trickle through to demand and maybe something else that could impact it? The Fed's interest rate decision yesterday of keeping rates on hold. Is there maybe a concern about demand, at least in the short to medium term?
Yes, that's right. Obviously, what's happening on the macro front, which is always very important with, where oil prices are going, did have, I believe, an effect on those inventories that we see. Look, last night's Fed meeting was, I think, in some cases dovish, in the sense that it does seem like they've taken further rate hikes off the table. But there's still some lingering concerns there. Are we still in an environment where interest rates are going to be higher for longer, and how much longer? If you have that very tight monetary policy or perceived tight monetary policy, it's obviously not too accommodative for growth, and therefore has a perceived effect on the demand for things like oil and oil products.
All right. Well, back to supply, because OPEC is meeting next month on the 1st of June, if I'm correct. What are markets expecting from that meeting?
Yes, so I mean, just on that, I think that's probably the next catalyst we definitely need to have a look at. Outside of any sort of macro developments like we mentioned before. Um, it's pretty finely poised at the moment. I think OPEC strategy is a constant balancing act. Do they come back into the market and try to gain a bit more market share, by reducing their production cuts, or do they extend their production cuts? I think the latter is sort of what most guys are expecting for the second half of the year at least. I think also with Brent here around $83 per barrel, and sort of news that you get from the IMF saying that the Saudis would love it closer to $100 per barrel. The feeling is that from most analysts out there is that we probably see an extension of production cuts in the second half of this year.
All right. Well, thank you so much for your insights and just giving us the lowdown on what is currently happening in that oil market, Ray. That was senior commodities trader from RMB, Raymond Philips.